All right, everybody, how are you? Orlando here, and we're going to go through what I'm looking for next week on the two markets that I trade, which is the US dollar, Japanese yen, and gold. So let's start by the daily. The US dollar, Japanese yen is quite bullish, right? Now, we have these highs around um, the 159 level, which are very strong resistance. We can see that here is where we saw buyers take price down all the way to the 140. So we're talking about from top to bottom about exactly 100, 1,900 pips. So that's a big move. Again, we saw price coming to the same level, liquidating the highs, right? But now the drop was only 700 pips. Now, that doesn't tell me much. More so because if we go to the hourly chart, after this sharp drop, even with an opening gap this weekend, price has recovered about 520 pips. So almost two-thirds of the move down has been recovered by the US dollar Japanese yen, which means that the Japanese yen is weakening against the US dollar. Now, levels, let's talk levels. So right now we have these highs and these lows. Let me show you here with a line. We have this low, which is the accumulation, the right here that we always see at this highs, the 159 level, which is key for us, right? Now, if you notice this week, I'm sorry, price didn't come to exactly the 157.40 to 157 level, which are these lows to retest them. So, um, looking for more bullish momentum, definitely looking for shorts next week. If you go to the 15-minute chart, we can see much better. Let me just zoom in this for you. And accumulation here again throughout this past few days. This is a big range of about exactly, I'm going to tell you, 80 pips or so for the US dollar Japanese yen. That's quite wide, in my opinion. There's nothing too much to see here, but what I would want to see here is a liquidation of this high. So this week's highs are at, I'm going to use actually the two on MT4. So 157.33, 157.30. Let's call it 157.33 is this week's highs. So I'm not going to do anything until we hit those highs. So at the open on Monday, what I would want to see, we go to the 5-minute chart, right? What I would want to see is price coming into that 157 33, right? And failing to go higher, creating a price failure for me to be able to go short. Now, fundamentally speaking, I don't look at fundamentals. I'm just looking at levels and what I would want to see. I don't want to be a buyer at the top of this strong market. Let me show you the hourly again from the bottom. We have seen extremely bullish momentum for about 500 pips. So I don't want to be a buyer at the top. I would want to get involved short on price failure below these highs, the 157.33 to 157.40. 157.33 again is this week's highs. 157.40 are these lows right here. So this entire level is what I'm looking for possible shorts. Now, we don't know what's going to happen, of course. No one knows. This is future auction, so we don't know. But what I would want to say is that there's two scenarios here, right? Either the bullish or the bearish, like always. But the thing is that if we open strongly, right, and we have an hourly close here above that 157.40, and again, another bullish candle, that would signal me more bullish momentum. Now, if that happens, I am scrapping my short idea, which would be, in fact, my short idea would be price opening very strong here, right? And coming back again down. So I'm going to change colors here, right? So I'm going to use blue for the bullish candle. So I would want to see some kind of an hourly, very bullish candle. Then I would want to see a bearish immediate candle coming back down. That would signal me a shift in momentum from bullish to bearish. And that would signal me that I would be very comfortable taking a short in such a strong market due to that shift in momentum, right? Or volume from bullish to bearish. Also because we are at a very important level. Now, that's the first scenario. That's the second scenario. So on the first scenario, which is the bullish scenario, I'm going to go again with blue. If we have an hourly close here above that level and price continues to go higher, right? What I would want to see, what I would want to play would be a pullback towards those levels. So very strong levels here, and I would want to see a pullback here, a rejection for me to go long. So that would look something like this. I like using these candles actually. So that would look something like after that bullish move. Let me redraw that candle, right? After that bullish move, I would want to see, exhaustion of the bullish move, right? And a pullback towards this level. Now, I wouldn't be looking to go long on a pullback alone. What I would want to see is some kind of rejection candle like this for me to be able to spot a reversal and to have a high degree of certainty that this is in fact a pullback and not a full reversal down. So heads up to that very important level here, this week's highs and the previous lows of the accumulation before before that move, that sharp move to the downside. So very important level here on the US dollar, Japanese yen. On the side of gold, this is the hourly chart on gold. Let's go to the daily. Again, we are in a very strong bullish market. And this sharp move, that sharp move from the all-time highs to the lows, we're talking about I don't know, that's 12,000 pips. I don't know. It's a sharp move, 12,000 pips, I reckon. Yeah, I mean, price completely rejected that 4,400 level, and moved up low. So let's go back to the 4-hour chart, just to get a clean view on what I'm looking at on the 4-hour chart. We are trapped in the middle of nowhere, in my opinion, right? So we have the weekly highs here, the 5091, let's call it 5090 level, and the weekly lows here at the 4655 level, let's call it. So those are the big two levels that I'm looking at, right? On the 15-minute chart, let's see what I am looking for. So right here again, I wouldn't be a buyer at the top of the move. We had a very sharp recovery here after liquidating all of these lows. So that was a good spot to look for longs. Now, because we are in fact at a very pivotal level again here, we have that weekly opening, that weekly gap here. We have those highs. So I'm actually going to use the MT4 lines here. So we have this high right here, very important key pivotal level. And we have these lows right here. So this entire zone is very pivotal. Now, what do I mean by that? You can see that here is where our price got rejected. Again, sellers were unable to break these lows, so buyers continue to push price up. But again, here is the indecision point, and where sellers to control again. So I'm just looking at levels, and here's where New York highs or Friday's New York highs were printed. So I wouldn't want to be a buyer here. Again, I would look for some kind of failure above to go short on the 5-minute chart. I would want to see for possible shorts, a sharp open to the upside, then price coming back immediately. Something like this, right? Or something like this for me to be able to know that momentum is shifted. And I can look for some kind of a pullback on this bearish move. Remember, I'm not looking for reversals here. Gold is very strong. Not looking for reversals, just looking to get involved in a bearish momentum on a pullback. We don't know actually if this scenario happens, if we're going to go back all the way down. That's impossible to know. So, but what I would want to spot is this, right? Some kind of a failure below these lows to possible shorts, so levels to look for. If we have a strong open on Monday, and then a rejection of the 49.67, let's call it 49.70 level, which is the actual high of New York, 49.70 level. If we have a strong open above New York's highs, which is this high right here, and then a sharp move back down, that would signal, failure. And I would look for shorts maybe below this low right here, which is the 49.35 level. That would be something that I would be interested in. Now, on the other side, if we open very strong, I wouldn't play the long side here, just because we are very, very well. Let's have a look at this again. The range here is about 450 pips. So I guess, I mean, if we open very strong, if you notice here, when we have very strong candles, we're looking at, let's have a look at, our bullish strong candles. This strong candle is about 320 pips. So if we open very, very strong, the probability of price hitting these highs is quite strong. So that would mean that, I mean, if we open very strong here with a very strong bullish candle and we hit that high, I wouldn't want to be getting involved long, right, at this level. Just because one, the risk is just way too high below these lows on a average risk. But a pullback towards the 49.75, it's not going to be enough for me because if we look at the US dollar Japanese yen, on which I would play a pullback here for possible longs, it's because we have a pivotal level. We have these lows and we have that high. So, the probability of that level holding on a pullback is quite high if we break with force, right? And come back and reject that level. So that's quite high. But on gold, that specific level is just New York highs, right? It's just New York highs. So I wouldn't be interested in a pullback to go long. Very honestly, I would only look for possible shorts on a strong open and then price coming back down below the weekly highs, which is this high right here. So that's what I have for next week. Stay safe, trade safely. Remember that gold is very volatile and ranges are super, super big. So trade safe, guys. I'll see you around.